Today we are bringing you your piping hot monthly Bitcoin digest where we cover the major happenings in the world of Bitcoin. Let's jump in. Welcome back to another video. My name is Ian Major. I'm an entrepreneur, Bitcoin pleb, and all-around raging capitalist. And I usually do these monthly digests a little bit earlier in the month, but there has just been so much happening. I figured I would wait a little bit, and I am not displeased that I did. We're going to be going through a number of topics today. I think this will be a really interesting one, starting, of course, with a brief update on the macro environment to give you a picture and understanding of what is happening in the Bitcoin market, why it matters. And then we're going to go into a number of just extraordinary headlines really on the topic of censorship. And we'll talk about censorship resistance with Bitcoin and much more. So you are not going to want to miss a thing. For those returning to the channel, welcome back, my friends. As always, it is a pleasure to have you. And for those new to the channel, I welcome you as well. If you like this type of content, I invite you to consider subscribing and join us in our merry growing gang in cyberspace. I cover all manner of Bitcoin related content, including a whole slew of tutorials on how to acquire Bitcoin, secure it, privacy best practices, running your own node, as well as kind of news and analysis pieces such as today. With all that out of the way though, let's go ahead and jump in. All right, so as noted, we'll kick things off as we often do with a review and survey of what's happening in the macro environment. I'm shooting this on Thursday, October 13th, and indeed the latest US CPI number came out, which was at a quite warm 8.2%, a little bit over where expectation was, and then core inflation was higher than expectation. So, not surprisingly, inflation is proving to be quite sticky. And what this means is that the Fed will certainly not relent in its quest to hike rates and try and quell price inflation. And so that's really it, right? This is the only game in town. We are in a world where sovereign debt looks more and more concerning. And in that world, entities the world over, as I have described on this channel in the past, are clamoring for dollars because they all have dollar-denominated debt that they still need to service even in an economic slowdown. So your revenue goes down, your income goes down, but guess what? You still got to pay those bills. You still got to pay your debts. So that is the sort of theme that we're continuing to see play out. And so hot CPI, that means the Fed will continue to hike, the next opportunity of which will be in November and then December as well. Most folks are anticipating, a 50 basis points and a 75 basis point. So something in that range. Given today's inflation reading, maybe it would be even higher than that. So suffice to say, it's not looking great. And this is amidst entities like the UN hilariously clamoring for the US Fed to stop raising rates because of the knock-on effect that has on the global economy. Again, given this dynamic we just described, which is that as the Fed hikes rates, the dollar becomes stronger, all things equal. And as the dollar becomes stronger, given its role as the reserve currency of the world, and a lot of nations having to pay things like energy, which has already increased quite significantly in price, denominated in whatever fiat currency. But now you also have to reflect the fact that your local currency, which you can print, versus the dollar, which you can't print, has also worsened against your favor. And so this is a double whammy when it comes to paying for things like energy, which, as the Western world has now suddenly remembered, is actually the most important thing in our existence. And it's not actually the green pieces of paper or, the government debt that serves as the core of the modern financial system. So a scary winter could be upon us. Unless something really breaks really quickly, which it could, the Fed is simply not going to pivot with this type of inflation reading. And so you can generally bet that November, December, we're going to see big hikes. And that is going to squeeze all the things all that much worse. And so in response, there's been a whole lot of how it started, how it's going. And I must say I am impressed at these bureaucrats. They are really reducing the cycle time for how it started and how it's going. It is getting truly impressive. A few notable examples of that. So Janet Yellen basically said, we haven't seen any indications of financial instability in our markets. And a mere 24 hours later, she says, I'm concerned about the loss of adequate liquidity in treasuries. This is a wild, bonkers statement, right? She has said the very quiet part out loud, which many people have been talking about for a long time now, that, the liquidity conditions within treasuries, which are supposed to be the most liquid market on planet Earth, there are real stresses and strains there. And when Janet Yellen, head of the Treasury, starts admitting that, things are horrifically bad. So that's a pretty impressive how it started, how it's going. But not to be outdone, the UK had this really impressive submission of a mere 31 minutes. That is quite impressive. You've got Bailey rules out extending the Bank of England intervention, and 31 minutes later, you've got BOE signals it is prepared to actually prolong those bond purchases. So impressive stuff. For those of you who may have missed it with the whole UK pension situation, I'm not going to go into excruciating detail here. There are some great threads on Twitter that kind of really break down the mechanics of how this unfolded. But basically, in a nutshell, pension funds, so enormous pools of capital, started getting margin called because the value of their assets was going down precipitously. Most notably, gilts or other forms of UK government debt, these kind of long duration assets that these big sort of pension funds will hold on their balance sheet. And so these pension funds are getting margin called because the value of their collateral is going down, and they genuinely did not have the cash to meet those obligations along with, their other obligations. And so what they had to do in response to this is really start selling assets, fire sale style, which would have the effect of pushing yields on UK government debt ever more upwards when it had already climbed significantly, creating an enormous challenge and issue for the UK government. And so the Bank of England stepped in to buy bonds and become that buyer of last resort so that pension funds could safely unload their assets in order to secure enough cash to meet their obligations. This is a truly astonishing thing. And I'm pretty sure, we were like hours away from the entire UK pension system collapsing, right? Before the Bank of England jumped in to backstop all of this. So just let that sink in. Clown world is wild, but man, we are seeing that bar get, I was going to say raised, but perhaps the right way is to say lowered on a near daily basis. And hilariously, you now have all sorts of stuff that is now trending more volatilely than Bitcoin. This includes government debt, supposedly some of the safest assets in the world. This also includes major stock indices. So it is just absolutely hilarious how that is how that's unfolded. To put it very objectively, we are watching in slow motion the sovereign debt of the world begin to collapse, and with it, the entire monetary and financial system in which we have lived for the last several decades. And I'm not necessarily saying that they can't, kick the can kind of one more time with a huge pivot from the Fed that reliquefies the system and all this stuff. I think that's going to happen inevitably. The question is when. But again, the fuse has been lit here. And you just have to imagine people watching these events. It takes different things to wake different people up, but some of these events we're observing are just staggering. Even for the absolutely average normie who has no clue what's going on anywhere in their lives, even some of these events have to kind of creep into their conscious state of being and make them realize, wait a second, all the things I've assumed about the institutions in which I, live and am a part of society aren't actually what they seem. So it remains to be seen, but that is all quite, interesting to watch. And so let's switch gears a little bit. I want to talk about how the year 2022 has been a non-stop advertisement for Bitcoin, and particularly its censorship-resistant properties. And a lot of these things are intimately connected with the scenario we just painted, where governments the world over, especially in the West, really do have their backs against the wall. They really do need to reset the system, hence the sort of great reset that we've seen as a meme it is a real thing. I mean, there's debate over the contents of it and exactly what it is, but it absolutely is a necessity for Western governments to reset the system in a way in which they can extinguish this unwieldy debt. And so first, to do that, they need to wrestle as much control as they possibly have over you, the citizen, and over your finances. So let's take a look at some of what has unfolded, particularly recently, in that context. Okay, so first, recall that the Canadian trucker convoy was earlier this year. Like, that feels years ago, but, I guess time in clown world goes a little bit slowly. So, flick of the switch, anyone who goes against the government, your money is turned off. Your access to your money is turned off. Canada proved that it can happen anywhere, anytime, at the completely arbitrary whim of any government bureaucrat. So fast forward a little bit to recently, I'm sure you have seen some of the PayPal news going around. PayPal basically came out with a new user agreement that would become active on November 3rd that stipulated a clause in which it could, if it felt it necessary, penalize the PayPal user by deducting $2,500, up to $2,500 from their account. And the different egregious crimes that could warrant such a response are things like promoting misinformation and who defines what that misinformation is. You can see where this all goes. So there was predictably a massive uproar. I closed all my PayPal accounts. I would encourage you to do the same because that is an absolutely sickening notion. I get that private companies can do what they want. That's totally fair. But you've now exposed yourself, PayPal, as an absolute enemy to human freedom and private property rights. And so for that, you are being served up. A lot of people have closed their accounts. Their stock is down significantly since all of this has unfolded. And they even tried to lie and say, like, oops, it was a mistake. Like, we actually didn't put that language in, or we didn't mean to. When, number one, we can see through that. But number two, if you actually look at it, they have made adjustments based on this pushback they got, which still gives them the right to do some pretty crazy, awful things. By the way, this also froze the accounts of a pro-democracy group in Hong Kong that has been championing for free speech. There you go, PayPal, ladies and gentlemen. You've also just had Kanye West have JP Morgan unbank him. They have rejected him as a customer. Now, to be fair, he did say some pretty strange and awful things. I think there was a comment about Jewish people. I'm not really privy to kind of all the details. I think he has since deleted that comment and issued an apology. But it's also no surprise that he's also been quite vocal recently. He went on with Tucker Carlson. He was campaigning with Candace Owens with, White Lives Matter. But he's clearly positioned himself as a conservative, right? And, albeit he did have these quite kind of inflammatory remarks, but it's pretty wild, right? JP Morgan just ejects you. Sorry, see you later. And I think the right way to compare this is to something like what Ian Chong here says, which is like, just so we're clear on what's acceptable and what's not, JP Morgan kept Jeffrey Epstein as a client despite internal warnings. So, there is no standard here. There is no objective standard. The standard is, in fact, political, as we have known for quite some time. Also had Alex Jones hit with an incremental fine that takes the total to something close to $1 billion, which is crazy. I mean, think of what you will of Alex Jones, but penalizing someone nearly $1 billion for a lie, even if it is an outrageous lie and a potentially dangerous lie, that is just astonishing, right? Especially when you put this into context by the following, right? The largest fine paid by any banking exec who was directly responsible for the 2008 financial crisis and all the pain and suffering that caused. I think there were studies done after that estimating roughly 10,000 suicides as part of this, was $67.5 million compared to nearly $1 billion. So there simply is no logical way to equate or make sense of the sheer magnitude of that penalty other than Alex Jones is a well-known kind of far-right, critic of the current regime. And so like, that's the reason. So I say all of this to just emphasize a point that like it starts with these celebrities and well-known people, but like when and where does this start? We saw it impact average everyday people with the Canadian trucker example, and so we've just seen an absolutely staggering, I think, set and just sheer number of these episodes in the course of like 10 months, right? So make no mistake, you can and will have the control of your money, of your fiat money taken from you. Whether that means outright taking it or banning you from it, or simply stipulating the ways in which you can use it, a la central bank digital currency, right? Which is absolutely on the way. And so of all the great properties of Bitcoin, we talk a lot about scarcity, absolute scarcity. We talk a lot about, the portability in the sense of being able to zip it across at the speed of light instead of gold, which is very clunky. But I think its crown jewel at this moment is censorship resistance. No one can stop you from accessing your Bitcoin. No one can confiscate it. Again, assuming you are hodling your keys appropriately. Check out my How to Secure Bitcoin playlist if you are newer to Bitcoin. I have gone through many, many different tools and ways and methods in which you can securely self-custody your Bitcoin. But this is becoming a massive, massive deal. You know what isn't exhibiting comparable censorship resistance? Well, that would be Ethereum. Let's have a look at MEV Watch. I will link this website in the description down below. But what this shows is the percentage of OFAC compliant blocks. You can look at this across different time frames. So if you did like the all time frame, that number goes a lot lower. But that's worrying because the more recent you come, the higher that number is. So 55% of the last hour's blocks enforced OFAC compliance. It is because of the significant usage of Flashbots, which is a block relay service and tool that a lot of validators use. The reason they use this is this concept of MEV boost. Basically, you naturally want to be as profitable as you possibly can be. This concept of miner extracted value has been a concept for quite some time. But people are using Flashbots because it is the most profitable block relay, and Flashbots enforces OFAC compliance. If you're unfamiliar with some of this, I've done a whole video going into what happened with something called Tornado Cash and how a lot of these kind of censorship concerns sort of flew through. And now that this is switched over to proof of stake, that kind of introduces additional complexity related to this. So again, on this channel, I generally choose to focus on pro Bitcoin and not sort of anti other stuff. But like, good luck. There is only one game in town when it comes to censorship resistance, and that is Bitcoin. And that is because proof of work remains at its core. This is why this is so critical and important. And so let's now close today's video off with some of the adoption related news. All right, so first up, BNY Mellon. This was formerly known as the Bank of New York. This is the oldest bank in the United States, and it is the largest custodian of assets. Now, that's different from assets under management. So if you look at the ladder, I think it's number 11, roughly around the top 10. So still very, very big in terms of assets under management, in terms of U.S. financial institutions, but it is the oldest and biggest from a custodian standpoint. They have now announced that they will custody Bitcoin. Now, of course, that is perhaps totally irrelevant to many of us who would never trust a custodian such as that with our Bitcoin. And that would be my recommendation to all of you watching and listening. But that is a pretty big deal when it comes to the broader sort of institutional landscape, mainstream, etc. One of the really interesting things about this is it's a pretty clear indication that the Fed has plucked and chosen winners and losers in this whole entire concept of custodying Bitcoin. Caitlin Long, who many of you will know, is the founder of Custodia Bank. So she's been working for a long time now on basically doing what BNY Mellon has now just announced that they're doing. And she has been sort of held back, blocked by all sorts of government regulators. And so I will put a link to this post in the description down below, where she's speaking at a fintech conference, I think in DC, and she has some choice words for, you know, what a kind of double standard this is. So anyway, that's very interesting, and I think it really does reveal that perhaps the Fed and others who manage these banks had a plan and had an interest in Bitcoin custody for some time now. Anyway, interesting to see. You also saw the announcement that Google Cloud specifically has partnered with Coinbase to accept crypto payments. So not just Bitcoin, but to accept crypto payments for cloud. That is, again, I mean, Google's obviously a big, a big entity, and that also contrasts quite dramatically with some of what they have said about cryptocurrency in the past. You had Jack Mallers raise $80 million as part of their Series B for Strike, which is an absolutely insane feat in this current market climate. As a co-founder of a startup myself, I can attest to the fact that this is a tough time to do fundraising. And so that's a huge achievement for the Strike team. And what's really interesting about this is the composition of the investors that makes up this Series B. You have not just kind of Bitcoin VCs, but you've got like really traditional entities like University of Washington, St. Louis. I think University of Wyoming is in there, putting skin in the game in a company like Strike. I mean, very, very interesting stuff. Hash rate has hit all-time highs multiple times. We've seen absolutely monstrous difficulty adjustments, which is getting to be at this point a little bit suspicious. Like you could call that bullishness of just this relentless pace of miners adding new hash to the network. But it is interesting because you have to imagine there's a lot of miners right now, especially with older models of ASICs, that are getting squeezed so hard. They're getting their margins squeezed. That, by the way, is a likely reason that we've seen price sort of continue to chill where it is. Obviously, the macro environment is the number one driver, but I do think this is a more micro driver as well. More and more miners are probably being forced to sell Bitcoin from their treasury because of increased electricity prices and because of lower revenue, lower reward, given that hash rate continues to grow. So you almost have to wonder, like, is some big player trying to force out smaller players? I don't know, but at this point it's getting kind of interesting. And while it's bullish in a fundamental sense, I do wonder what is potentially happening, but that might be a story for another day. We also saw Visa partner with FTX to offer kind of crypto debit cards in over 40 countries. You had e-commerce giant Farfetch announce that they're accepting Bitcoin as payment, and a lot more. That's a pretty crazy list. I mean, it's just one week after another you get these big announcements. This was certainly not the case in the last bear market. So with all of that, let's go ahead and conclude today's video. All right, so we had a pretty meaty digest for this month. We started with some of the macro highlights. It is looking like a tough winter out there, and really macro is, for better or worse, the absolute number one driver of any asset prices. We talked about this increasingly concerning trend of examples where individuals, entities, companies are getting censored in their use of money. And so I think Bitcoin censorship resistance is continuing to be on showcase and is driving adoption. But I'm curious to hear, what are your thoughts? What did I miss? What are some of your favorite happenings recently in the world of Bitcoin? Are there specific topics that I've covered or haven't covered that you'd like to see future videos on? Let me know in the comments down below. But for now, we'll go ahead and leave this here. I hope you found this valuable and insightful. If you did, you already know what to do. Give this video a like. Use the share feature underneath this video. That really does help the algorithm these days. And if you were so enamored by this content and you want to donate and help me continue to make these videos, I will leave my Lightning address and Strike account on the last page of this video that you will see momentarily. With all that, we'll go ahead and leave this here. As always, every sat counts. And until next time, I'll see you then.